Hello everyone. I will discuss chapter 6 in this lecture. This chapter is about insurance company operations. And these are the concepts that we will cover in this chapter. So some of the important operations in an insurance company are rate making, underwriting, production, claim settlement, insurance, and investment. So we'll look into each of them in more details. The first is rate making. This relates to the pricing of insurance and deciding the premium. So premium is the product of rate and exposure units. Exposure units are measured in dollar terms, and rate is the price for each exposure unit. For instance, I want to take a insurance policy of $10,000. That's a life insurance. The exposure unit is $1,000, and the rate for each exposure unit is $1. So my premium for $10,000 of life insurance policy will be $10. This is how it works. So the idea is the total premium charged to all customers should be adequate for paying out losses as well as covering expenses. So the rate and the premium is decided by the actuary, who is an insurance specialist in the company. The next operation is underwriting. Underwriting refers to the process of selecting and evaluating customer applications. The company will have an underwriting policy which specifies what type of customers the insurance company will serve or will avoid. What is the volume of insurance that the company will provide? What are the territories or regions that it will serve, and so on. The basic idea is that the company should earn an underwriting profit. The premiums charged from all customers should be over and above required for covering losses and other expenses. One key issue is to reduce adverse selection. Adverse selection means that individuals with higher risk profile are given insurance at standard rates. So there is a higher chance of loss occurring for those individuals, and it can lead to loss for the insurance company. The other consideration is providing equity to policyholders, which means that the policyholders will be charged premiums based on their risk profile. The process of underwriting starts with the agent. So there is a application filed with the company. Then the agent's report comes, which provides further details on the applicant. There could be a physical inspection in case of property and casualty insurance, or a medical examination in the case of life insurance. In case of life insurance, the company may also access Medical Information Bureau report. This is an organization which has details of individuals as provided by member life insurance company. After reviewing the information, the underwriter decides whether to provide an insurance policy to the customer, whether to provide insurance policy with more terms and conditions, or to reject the customer's application. Nowadays, we notice that many insurers use computerized underwriting for personal lines of insurance. That makes the process more streamlined and cost effective. The other factors in underwriting is to ensure rate adequacy. That is, the rate charged to customers should not be such that it leads to underwriting losses. If there is availability of reinsurance, it helps to underwrite more policies. If there is a policy to allow for canceling loss-making policies, then also it helps in underwriting. The next function is production. Production means the sales and marketing activities in an insurance company. The life insurance companies have sales department and property and liability insurers have marketing department. The agents are the first point of contact and they are supposed to be highly competent with good knowledge of the insurance products. That way, the agents are able to advise clients and provide them with suitable insurance products. To ensure that the sales and marketing team are well informed, there are different uh, organizations which have programs or training certifications. It helps to improve the knowledge of the sales team. The next important operation is claim settlement. It is relevant when an actual loss occurs. So the objective is to verify whether the loss is genuine or whether it is covered by the policy. Then the company has to ensure that fair and prompt payment is provided. And in some cases also to provide personal assistance to the affected customer. The company needs to ensure that they do not refuse claims without doing a proper investigation, that they do not use dishonest means while doing settlements, and they also don't offer lower settlements which could lead to lawsuits. So who are the individuals involved in claim settlement? So the insurance agent has the authority to settle small claims with the customer. The staff claims representative is a salaried employee of the insurance company, and they are responsible for investigating a claim and determining what should be the amount of payout. An independent adjuster represents the insurance company and they work based on fees commission. A public adjuster represents the customer and they also work based on fees commission. The process starts with the notification of loss. Then the adjuster investigates the claim to determine whether it is authentic and whether it is covered by the insurance policy. They may also ask for additional proof to verify the authenticity of the claim. Once they have decided based on the information, they inform whether the claim will be processed or whether it will be denied. That's all for this part of the chapter. I'll continue with the rest of the chapter in the next lecture. Thank you.